QuickBooks Online 2025, the accounting process using data input forms overview. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are online in our browser searching for that QuickBooks Online test drive, the free sample file available to everybody provided by Intuit, Intuit being the owner of QuickBooks. Looking for the result that has intuit.com in the URL, that giving us some assurance that it's a good link because Intuit once again is the owner of QuickBooks Online. It might ask you if you are a robot. If so, we're going to verify that no, we are not a robot. That should take us into the sample file. So we're in the sample file, which is Craig's design and landscaping. It already having data in it, which is great for practicing the navigation and deconstructing what has been done, how the data input has happened, similar to deconstructing an engine. We're going to do this every time now. So we're going to practice going to the reports on the left-hand side. We have the two major financial statement reports, balance sheet and income statement. I'm going to open them in a new tab by right-clicking on the balance sheet, open link in new tab, right-click on the profit and loss, open link in a new tab. You can see them generating up top. I will go to the middle tab. There's our balance sheet, close the hamburger. I would change the date range to whatever we're using, but we're going to stick with the defaults for now. Tab to the right, closing up the hamburger. And there is our information. This is my basic layout. I'm going to have the first tab, which is our navigation, our data input tab. And then every time I make a change, every time I enter a form, I'm going to look at what happened to the balance sheet and the income statement on the right-hand side. Okay, so in prior presentations, we discussed the basic navigation of a web-based kind of application. One of those core things being you can increase the size of the screen by holding down Control and zooming in. I'm currently at 125% on the zoom in. We can duplicate the tabs. And then we also talked about a general web-based kind of design, which means that the data input forms are typically going to be on the bars on the side in this case, as well as the items on the top, particularly the cog up top. We also then touched on the idea that the underlying foundational items are usually in the cog here, and the day-to-day things and data inputs that we will be doing will be forms, general forms here, and then when we're working with people, the items down here. Now I want to go into a bit more structure in terms of the general accounting process, because that will help us to take this huge, overwhelming thing and then break it down into cycles and chunks, which are digestible. Now, remember, this will depend greatly on the type of industry you're in and the size of your company. So again, if you have a really small company, you have just like gig work, and what you want to do is connect to the bank feeds so that you can at least get an income statement to do your taxes for the Schedule C. That would be like the most basic kind of accounting needs that you would have. Then you might be able to get away with basically doing the two forms from the bank feeds, which are bank deposits, record on the other side to revenue in that kind of system. And then the expense form, which is a decrease to the checking account, the other side going to expenses typically, and then possibly jump to the bank feeds section and get into that in more detail. However, you can see there's a whole lot of other forms happening here. So if you have a more complex accounting system, you may need to use some or many more of these types of forms, which are going to complicate the system and make it less of an automated system. So our strategy then is to think about a fairly complex accounting system and where the accrual components come into those accounting systems and why, and then how can we integrate the bank feeds in this more complex type of accounting system. And whatever you don't need, you can trim down for your personal bookkeeping and simplify the system to whatever system you need for your particular business or for your clientele. All right. So let's first think about the objectives of the accounting. Why are we doing the bookkeeping? So the general purpose that everybody has bookkeeping for is the end result of the financial statements that we're going to be generating, the main financial statements being the balance sheet and the income statement. That's why we open those first, so we can see what is being created, and also communicating with the clientele or communicating with everybody we have a financial interest with. So for us, that's going to be the customers, that's going to be the vendors, that's going to be the payroll. The level of communication we have with customers, vendors, and the payroll, our employees, will depend on the complexity of the business. If we have customers that we're invoicing, we're going to have to deal with the customers more. If they just come into a cash register and pay us at that point in time, the service people have to deal with the customers and be nice and whatnot, hopefully. But we on the accounting side don't have to interact with the customers that much because we don't have to collect on the receivables, right? The vendors who we're paying, if we have to enter the bills or deal with the purchase of inventory, we're going to have more interaction with the vendors than if I'm just paying the telephone bill or something like that, in which case we might be able to automate. Payroll depends if we have payroll or not, right? If we don't have payroll, we just have contractors, then we might not have to do as much on the accounting side, although of course we have to interact with our employees and contractors in other ways outside the financial realm. I'm just talking about the financial situation and how we can integrate that and make that as smooth as possible. All right, so that's going to be those objectives. Now, we also have the objective on the bookkeeping side to automate things as much as possible with the use these days of the bank feeds, because we want the focus of the business not on the financial communication and reporting items. We want the focus on revenue generation. So we want it as seamless as possible. Our goal is to make it so that it's actually behind the scenes. People don't really notice it because it's working seamlessly behind the scenes, and they can focus then on their interactions for revenue generation and sales and so on and so forth. When I say they, I mean the business owners, the management, the employees of the business. So that's the general idea. So what's going to be the cycle that we're going to have? We're going to be entering the data into the system. As we enter the data, it's going to be using these forms. Typically, these forms are going to be the things that construct the financial statements. And then at the end of the year, typically, and we would then provide the financial statements to the accountant to provide the financial reporting. Now, note that if you're a larger business, the larger the business, the more reporting you typically have to do. So we might have to report things monthly. We might have to report quarterly, right? But if you're a smaller business, it's likely that your main objective is tax preparation. You want to try to make it as seamless as possible so that at the end of the year, you can do everything you need to do, which is usually in the United States, income tax preparation, payroll tax, W-2s, 1099s, and that kind of thing. And that's what we're going to be doing. So let's touch on one of these objectives first, the end goal, the financial statements. So the financial statements, what are we going to do with those? One thing we're going to do in the United States is use them to create our taxes. So whether you're a corporation, a partnership, a sole proprietorship, you're typically going to have income taxes typically, right? And you're going to need at least the income statement because that's going to be the performance form. We have an income tax. The income statement is the performance, how much income or net income you generated, on which you will have the tax, which is the form Schedule C in essence with a sole proprietorship. Larger businesses will need a balance sheet too. Now note, just because you just have the income statement, you might be saying, well, why would I need the balance sheet then? Why do I even need QuickBooks? I have doing twice the work. I got a balance sheet and an income statement. I only need the income statement. Well, you want to have QuickBooks because if you try to do the income statement without the balance sheet, you're not using the double entry accounting system. So even if you don't have to report the entire balance sheet, you want the double entry accounting system, which is in essence the balance sheet, because that gives you assurance that your numbers are at least more likely to be correct. If you do a bookkeeping system like QuickBooks forcing you to be in balance and you double check cash, which is kind of like the lifeblood of the company, cash being the veins that takes that blood through all of the cycles. So if that's healthy, you can have some general idea that the overall business is healthy. Now, you also might want the financial statements, of course, for internal decision making. That's how we decide what we're doing, have our budgets in place so we can trim down and be lean and mean in our business from a financial perspective. But you also might need the financial statements for external reporting. For large publicly traded companies, that would be for the shareholders and so on. You'd be required to report that according to like generally accepted principles and so on and so forth. But for small companies, you might not be in a public stock exchange. So the question is, why do I need that information? Well, at some point, businesses might need it because they might need more capital to grow, in which case they're going to need a loan, which means they're going to have to report the financial statements to the bank, or they might want to take on other partners or investors and so on as equity interests in the company, in which case they're going to have to attract them with the financial statements. Now notice, tax return preparation and external reporting have basically two different objectives from the perspective of the owner. So we in the accounting department or as a bookkeeper, you want to keep in mind just like what's the mindset of most likely the people that you're dealing with, right? So that you can understand them when you're talking to them, right? So if I'm the bookkeeper and I'm talking to the owner and I'm talking to the CPA firm or public accountant, what is the owner going to be thinking? They're thinking, I want my income tax reporting as low as possible so that I pay as least taxes as possible because the tax people keep taking all my money. And so notice they would like to have a very low net income for taxes, right? And then on the other side of things, when you're trying to get capital, you're trying to attract people to do business with you, giving you a loan from the bank or possibly attracting investors, you want to look good. So in that case, they would say, hey, I want to make my financial statements, I want to look as good as possible so I can attract the investors and get a loan and so on. And I need this and that in order to do that. So notice from the CPA firm's perspective, what they're going to be like saying is like, man, the owner of the business is asking everything at once, right? It's impossible. What their objectives are impossible, right? They want to look good for external reporting to get a loan, but they want to look bad for taxes, right? And what I'm trying to do, they don't understand. What I'm trying to do is make you pay as little taxes as legally required based on the accounting standards of the tax code, and then report things for external reporting according to whatever code I need to report it in, which is generally accepted accounting principles typically, or accrual accounting, right? So if we're in the accounting department, we're kind of in the middle of those two worlds, right? If there's two people are separate, you might be doing the whole thing yourself, and that whole conflict is going to be going on in your own brain, right? So you might want to think about like why, break those objectives out, and you'll start to see that possibly more clearly. So that's going to be our financial statements reporting. So if I go back to the first tab, then the cycle that we're gonna end up going through to do this is, if it was a new company file or a new QuickBooks file, we'd first have to set up the groundwork, the foundational items. That's the stuff that's usually in the cog over here. So if they never had a QuickBooks file, or it's a brand new business and you're a bookkeeper or the accounting firm, you'd have to, as we discussed before, sign up for QuickBooks, right? And then once you have your QuickBooks file, it would already have a general ledger in it because it gives you kind of like a default general ledger. But there's a lot of stuff in the general ledger. That's going to be one of the lists. So you might go into the general ledger and customize the general ledger and so on and so forth, and then possibly pull in any data that you need from any prior accounting system into the current accounting system. And then you can add your customers and your vendors. These are all basically list items. So notice that these are things that you need to do only if you start up a new company file. If you go to work for a company file that's already set up, all that stuff will already be set up. Now, you might be a specialist in fixing the setup process that was a mess, in which case you still need to know these underlying foundational items because that's what you're trying to work with. That's what you're trying to fix. And sometimes the only fix is I start a new company file and I basically started at the beginning of the year. I take the old numbers as of the cutoff date and I pull in the numbers, and then I clean up all of the information in the new company file going forward. That might be the way and the only way to do it sometimes, but that's a different kind of scenario. So, right, if I'm starting a company file, I'd have to lay down these foundational items which are going to be basically these list items and the settings. We're going to get into this in a lot more detail in the second half of the course, because that's when we will focus on starting a new company file and actually building the financial statements in essence from scratch. In the first half of the course, we're doing the deconstruction. We're saying the financial statements are already created. Here are the data input. We're trying to deconstruct from this point down to the source documents and then analyze how it was created, and then we'll reconstruct it. So once this has all been set up, then all you need to do going forward year to year is to do the actual data input, which again we would do possibly on a yearly basis, and then do the year-end reporting, tax reporting, external reporting, the payroll reporting, and so on and so forth that is needed at least at the year end, possibly quarterly and monthly as well. So the typical forms that we use to do that are going to be over here on the left-hand side. So the data input forms are here. Now, once again, if you have a simple business, you might be able to do everything in essence with the bank feeds. But if not, you're going to have to use these forms. So what we want to do now then is think about each of these cycles in terms of the cycle, breaking it down by cycle, because that will again help us to chunk the data together and think about a more complex cycle to a less complex cycle. So I'm going to get into this more detail later, but I want to jump over to this flow chart just to touch in on the concept and what we'll be doing going forward. This is from the desktop version homepage, but we're just using it as a flow chart. We're in QuickBooks Online. This is the QuickBooks desktop, but we just want to see the flow chart because it's still applicable to just about every accounting system. So notice in the flow chart, you've got the vendor cycle, the customer cycle, and the employee cycle. This is how I would imagine in my mind, and how I suggest you imagine the tree of kind of operations of the accounting department in your mind. If you were in a large company, you would only be working in typically one of these cycles and possibly in a very specialized part of that particular cycle. If you're a bookkeeper, you're going to be doing all of them, but they're going to be a lot more simplified. You might have a lot easier of a process. So let's just do a quick breakdown of them. The vendor cycle, that's where the money ultimately goes out. We're paying for things, typically expenses, utilities, and so on and so forth. So the easiest cycle would be a cash-based system, not only a cash-based system, but we pay everything electronically with bank fee, with an electronic payment, right? If that happens, we might be able to use the bank feeds, and the bank feeds are a type of check form, and use that to record all of our outflows. But it might be more complex that we have to enter a bill, and that means we have to integrate accounts payable, which is going to make things more complex, and we might have inventory, and that means we have to think about whether or not we're using a perpetual inventory system or a periodic inventory system, and whether or not we have purchase orders that are integrated into our purchasing of inventory. And inventory also often has an issue of sales tax, which is a type of usage tax that we can deal with. So you can see the complexity of a very simple system. We just have everything electronic versus we have inventory, purchase order, and then form. So these are the other forms that will come into play. On the customer cycle, we just want to think of it by cycle. We can say, okay, the most easy customer cycle, we just get paid in gig work by like YouTube or whatever, because we're a YouTuber or something. If that was the case, then we could just use the deposit form through the bank feeds to record revenue. But if we're at a cash register, we probably want the internal control to verify the cash register. So that's going to make things more complex, even though we're still on a cash-based method. If we have to invoice the clients first, we're going to have to enter the invoice, then receive the payment, then record the deposit, which is going to be more complex. If we have to have an estimate, we'll have to tack on the estimate that we can use to create the invoice. And if we have inventory, we're going to have to first purchase the inventory, and then when we make the invoice or sales receipt, if using a perpetual inventory system, that will not only record the increase in revenue, but decrease in the inventory. And if we have to deal with taxes like sales tax, which is a type of usage tax, once again, the invoice and sales receipts are going to become more complex. And then, of course, payroll is going to be an issue in and of itself. Do we want to do that within QuickBooks, outside of QuickBooks? We have to pay more for it either way, in which case we're going to have a whole payroll cycle that we'll have to deal with, paying the employees and then paying the payroll liabilities at the end of the year, dealing with the W-2s, W-3, 1099s, the 1040s and 1041s. So when you're imagining the processes that you're putting together, you want to imagine them not by dates per se of every single transaction, but by cycle. And then think about what's the most efficient cycle that we can put together. We'll look at each of these cycles individually. And then as you're thinking about the most efficient cycle, where do the bank feeds fit into that cycle? As we add levels of complexity, we're typically adding accrual components, which will it'll complicate basically the bank feed usage. So that's going to be our general strategy. And so those are going to be the forms here that are in the drop downs. And then, of course, as we discussed before, if you need to communicate with customers, then you're going to go to what I would call the centers on the left-hand side. That's the old QuickBooks desktop name. The sales tab here is the customer center. The expenses tab is what I would call the vendor center. And then the payroll tab is, of course, the employee center. So remember that if I hit the drop down up top, if I'm looking at the customer cycle, I really only need to deal with the customer center if I have invoices usually. You might have prepayments as well, like deposits, but usually for most businesses, either they have sales receipts or they just record revenue with a deposit like gig work, or they're at a cash register where you have a sales receipt that you're going to enter and you don't have to follow up on collecting. If I have to follow up on collecting, then I'm going to have invoices. And that's when it's going to be really important to go over here into the sales center and communicate with our customers, because we're going to have to try to politely but firmly ask for our money, right? And follow up on the collection process. So that's going to add a whole added amount of complexity. If you're in a larger company, that'll spend their entire job will be tracking, organizing the accounts receivable and trying to collect on the accounts receivable. Then on the vendor side, if you just pay for things with expense forms, it's going to be easy. You don't really need to go into the expense center. But if you enter bills, which is often the case for larger types of businesses who are trying to delay payment as much as possible due to the time value of money on larger dollar amount transactions or on larger quantity of transactions, then it's going to be important for us to track go in here to the expense center, which is basically the vendor center, so that we can track the outstanding bills and make sure that we pay them. And once again, if you're in a large company that has a lot of stuff, you have a whole department that's just trying to say, how can I pay the bills as late as possible while still taking advantage of any cash discounts that would be in place and not making the vendors that we deal with angry by delaying payments basically as late as possible, so we can maximize our cash flow and the time value of money as inflation kicks in. And then we've got, of course, our payroll, which if you don't have any employees, you don't have to deal with payroll. If you have employees, do you do payroll inside of QuickBooks or outside of QuickBooks? If you do it within QuickBooks, then you're going to be, of course, over here in the payroll center processing the payroll and dealing with all the payroll information. All right, so those are the things that we want to keep in mind. Now, notice that if you're a bookkeeping business, then what you want to do is say, as we're going through this, is try to say, what kind of clients do I want to specialize in and pick up on? And where can I have a competitive advantage? Do I want to try to make everything as seamless as possible, so I am automating everything, in which case I might want to avoid having to track invoices, for example, and the accounts payable, those types of businesses that have those requirements, and look for businesses that it's going to be easy for me to streamline. Do I want to specialize and deal with inventory? How exactly am I going to do that as we go through this process? What am I going to do with the payroll? Do I want to deal with clients that have payroll? Do I want to be a specialist of doing the payroll, buying the payroll, doing it within QuickBooks? Do I rather want to work with a third party that does payroll so that I can basically still be in a cash-based system, work with them to do payroll, and then someone else to do the accounting? It's also useful just to think of your bookkeeping network. If you want to automate things, then what you really would like to have is at least a network of you and a CPA firm or tax preparer so that you can achieve your objective of communicating with the customers and making things as unintrusive in the accounting department as possible as you create the financial statements, and then work with the tax preparer that knows your system so that they can do the adjusting entries at year end to create the financial statements and or tax return, and then possibly also have a network with the payroll people if you want them to do the payroll, once again allowing you to be on a more automated cash-based system, and then integrating what you're doing with the outside payroll department so that you could just enter the data with the bank feeds even, and then work with the CPA firm to shore everything up with the reports generated by the payroll department for external reporting and taxes. So we'll touch on all of these things basically as we look at each of these forms. We're going to look at basically each of these forms by cycle, and then and then how they impact the financial statements, how bank feeds might impact them, and then again in the second half of the course we will construct our financial statements from a new company, building it out from scratch, creating a new company file, making the list, chart of accounts, customer list, vendor list, product list, and then actually doing data input for all of these cycles for 2 months of operations, doing the bank reconciliations and adjusting entries. And so that we will imagine both the setup, the setup process, the data input process, and then what might be done for the adjusting process by either ourselves or a tax firm as well.